Hi, everybody. Welcome to another in the series of RePredict integrating with InsMark. Today, we're going to talk about something called qualified wealth transfer. RePredict, if you haven't seen any of our other videos, is an AI online predictive spreadsheet program, particularly helpful for those in the insurance industry on making a number of different changes and seeing what an illustration would look like without having to go back and run company software every time. RePredict AI, you can access this several ways. We'll show you how to get into it, but if you go in here, you can hit the help button and see how this works. The other way to get familiar with this is if you scroll down, we've also got some videos on here that range from 4 minutes to an hour and a half to about 10 minutes. So let me give you a sneak peek of what we're going to be talking about today and what the potential outcome is of this. So it's for people who have qualified plan assets, and this is on a 60-year-old. And what we're going to show is if we look at total retirement plan taxes paid of difference between status quo and qualified wealth transfer, it's almost $1.3 million, about $1.2 million, let's call it. And more importantly, and this one is designed for income, you can see we're under status quo, the income runs out. However, with qualified wealth transfer, it doesn't. As a matter of fact, that goes all the way to age 120. While at the same time, focusing on wealth to heirs, you'll see that all along the line, heirs get more money, and projected, assuming they got 7% on their investments, they would get about 3.3 million under status quo and get about $3 million more, 6.3 million, with qualified wealth transfer. And when you stack up the taxes under the don't do it versus do it and the income don't do it versus do it, it's pretty compelling. What does this look like? From a visual perspective, it's this. Somebody who's got any type of pre-tax plan, IRA, 401k, 457 plan, pension profit sharing plan. Typically, we're going to take pre-tax distributions and fund those into a life insurance policy over the course of 7 years. Now, there will be a tax due on those distributions. Those taxes will be paid with income or other assets. However, the policy at the end of year 10 is going to refund those taxes to the individual. So yeah, they'll pay the taxes, but then they'll get a refund. So it's tantamount to a Roth conversion with the refunded taxes. And depending upon what the ultimate objective is, either tax-free retirement income, which will be our first example, or maximizing wealth transfer to heirs, which will be our second example. So what does that look like? Well, we have a spreadsheet that kind of lays this out. And what you're seeing here is this distribution of $337,000 a year for 7 years. That's predicated upon a beginning balance of $2 million in an IRA with an assumed 7% rate of return. And as you'll see, using InsMark's depletion calculations engine, that's what we come up with for the amount that it would take to drain the account over 7 years. Now, assuming a 40% bracket, this would be the amount that they're coming out of pocket every year from income or other assets to pay the tax on that distribution, because that full 337 is going to be the premium that's going into the life insurance policy. Notice, though, the sum total of the taxes paid over 7 years will be refunded via a policy loan at the end of 10 years, and then we're going to turn on income projected to be $216,000. This is on a male who's 60. This is showing end of year values, and the illustration that we used to generate that is right here. So what we want to do is we want to get these values into InsMark and then be able to manipulate them for different scenarios. So if we go back to our RePredict and we hit ledgers, how does this work? So I want to create a new ledger. So I'll hit the plus button. I now want to get the information in here. The way you could do it with a CSV file, Excel, but most people are going to have a PDF. But we don't need all the pages of the PDF. So we're going to just extract the ones we need. So we're going to hit extract PDF, continue. We're going to choose files. So you want to go to where you have this stored on your computer, okay? And that would be, for me, let's see, this illustration right here. Now, I started in 1984. I think back then we had like 2-page illustrations. I don't know how many are in here now, but I definitely don't need all of them. I'm just going to hit via the radio button these 2 pages here, because I know there's summary pages. I already looked ahead. This thing goes to 110 on this one. So that's really all I need. I'll hit extract pages and then I'll hit download. Okay. And I'll save that to the file. So I'll hit, let's see, mail 602 pages ext. All right. So I now want to go back into RePredict and see up here where it says import data. I'm going to hit import data, hit upload file, and I'm just going to bring that in, upload. Now, it does a pretty good job of doing away with the subtotals and things like that. However, sometimes it doesn't pick up the right name at the top. You are in now what's called the edit page. So if you click on any one of these columns and then right click, you can insert a new column before or after. You can rename. And in this case, I'm a little anal. I want to rename to end of year. All right. Premium net, I think that's net policy loans on the thing. So let's just call it policy loans or just loans. I'll rename that loans. Okay. Boom. Submit. And the rest of it, I'll just leave the way it is. See this button up here that says plan with InsMark? We want to get this data over to InsMark, which, by the way, the other thing you can do if you want, you can export this and it'll export it to a CSV that you can bring into your own proprietary spreadsheets or other planning tools. But now we want to hit plan with InsMark and bring this over in a way which InsMark can recognize it. So I'm going to make a notation that this is a mail 60. I think I put this in before. QWT stands for Qualified Wealth Transfer Income of 216. By the way, use an alliance here. This is company agnostic, product agnostic. It doesn't matter which carrier you use. It doesn't matter whether it's indexed universal life. It doesn't matter whether it's whole life, whether it's variable life. All right. It will be able to do these predictions no matter what. So I think this is the name of the policy. We'll put that in there. I believe it was run at 6.72, and I'm going to call him Bill Stinson Sr. Now, if you go back to the illustration, it depends upon the carrier, but some of them, like this person, we put in age 60. Well, these are showing values at the end of first year, being age 61. I want to put him in, and I'm just doing it because I know this is the way InsMark. I'm going to put him in at 60. Okay. And you can't glean from this data whether male, female, or other. We're going to put in male. If you go up here, you can move this box around so you can see the rest of these values. Notice it brought in the right death benefit value. It brought in premium correctly. It brought in loans correctly, but accumulation value, it can't really distinguish which one of these is accumulation value. We can tell it's current value. So there's a little drop down box here that we're just going to slide down to and tell it, hey, align that with current value. Surrender value is cash value. So we'll bring that down, hit cash value. Now, if you were looking to illustrate policy charges and things like that in there, you could, which is a matter of fact, that's where it says total, that is total policy charges. We're not going to bring that in at this point, okay? So I'm going to hit save and submit. I've already saved it before. So I'm just going to put -2, save and submit. And what it's going to do is it's going to bring this data over to the data files in InsMark. And depending upon whether you use the web-based version or, like me, the local version, all these different, InsMark illustration system, Wealthy and Wise, loan-based split dollar are going to pop up. I want to go to Wealthy and Wise, which, by the way, I already have open. Okay, but I want this data to go into Wealthy and Wise. And I've partially completed this for you. When that box comes up, don't do anything. Let this do its own thing. So let's go into this wealthy and wise. And what I have done here is I want to have InsMark do what it's so great at doing, which is to compare status quo versus this qualified wealth transfer plan. So what I did for status quo is, of course, I put them in at male, age 60. Desired cash flow, I went in and put in spendable cash flow equal to the cash flow that's generated from the life insurance. Okay. I also started with $2 million of plan assets, assuming a 7% year in, year out rate of return. And I used a 1% management fee on that. Okay. Now, if I hit preview, this thing's going to tell me it's going to run out of money, which that's okay. But if we hit continue here, there's the 2 million. And I know they've got more assets than this, but we're just focusing mutually exclusively on the qualified plan monies. And there's the income that's desired, but notice it does run out of gas right about there. And the reason it does so, let me make this a little bigger so you folks can see it better. And the reason it does run out is look, 2 million at 7%, 1% management fee, letting it grow, never having a down year. Well, in my private practice, I used to tell people that Webster's definition of gross is ugly and you don't get to spend it because you have to make a gross distribution of 361,540 to net the same thing that would be able to pull out of the life insurance. So rather quickly, a little past life expectancy, this is going to run out. Okay, if we track the taxes along the way, and here they are annually, here's the aggregate running total. And it is amazing how this just seems to be a mathematical fact. By the time this thing runs out of money, the total taxes paid cumulatively are more than the beginning balance of the qualified plan assets. Now, to the extent they die, husband and wife die, it goes to a non-spouse beneficiary. There's something called income with respect to antecedent taxation. We're not even going to assume estate taxes here, just a 40% bracket going to the kids. If that's the case, here's the remaining plan assets minus the tax net to heirs. This is what heirs get, okay? So this is a little redundant here. Wealth transfer here is showing the same as after-tax plan assets to heirs. So we got our status quo in, and what I had done is I had went and I just duplicated that, and then I named it qualified wealth transfer here. Difference being that on this side of the ledger, I put in retirement plan assets for 2 million, and this is how I came up with the premium. I said, okay, let's do a schedule, level amount to deplete, and we'll do it from 60 to 66, which is the 7 years. Let's apply that. Okay, I like round numbers. So I'm just going to put in 337 and equal is your friend in InsMark, equals. And then that last one, I'm going to force out the 340,124. I'm really only going to fund the policy with 337,000 for 7 years, but I don't want to have hanging chad, if you will, of $3,000 that's it's doing RMD calculations on. So we got that coming out. And if you go here real quick and look at the taxation on that, what it's going to show is this. They're going to have to come up with, in this version of qualified wealth transfer, we're going to do another program where their out of pocket's a lot less. But this one is going to appeal to some people for one reason. The other version is going to appeal to others for a different reason. This is the amount of money they're going to have to come up with out of pocket for 7 years to pay the tax, but ultimately they're going to get reimbursed the tax that they paid with the policy loan. So I'm going to have to put in a couple things. Desired cash flow. I want to put in that 216,924, but expected cash flow, I'm going to put in income or other assets that this money is coming from another asset that they have, or they're diverting some income for those 7 years. Okay. And now I want to put in the life insurance policy that we just exported. So I go into here, we'll say this is inside the estate because we're using it for income. Schedule. All right, import. Let's import the data. Well, this is going to go into the data file, and there it is. This is all that information that we exported from RePredict. And if I just hit OK, what you should see and what you do see, there's the premium. There's the loan to pay them back the tax. There's the loan to generate the income. Here's the accum, cash value, and death benefit. So we hit OK there, right? Now, if I hit preview, what you're going to see is we got our 2 million, but this time we got life insurance showing up. So our dedicated, this is what we want for income. This is what we need for dedicated cash flow to fund the life insurance. We're going to have this 134.8 coming in from income or other assets, and here's the loan from the policy to A, pay them back the taxes they paid, and B, to generate the income. Okay, you'll see we've got a little excess cash flow because I took out more than I needed to fund the premium. And in this instance, we're not even assuming that they take this 943,600 and invest it someplace else. They just get that back for the taxes they paid. Okay. So here's our 2 million at 7%, distributions that deplete the account over 7 years. And here's our tax that's paid over that. There's the aggregate running total. And there would be income with respect to a decedent taxation for the intervening period prior to those monies being transferred over to life insurance. We don't have an estate tax here. All we really do have in this case is of transfer taxes on the income with respect to a decedent tax. So plan assets minus the tax plus the life insurance. Okay, this is what heirs are going to get. So there's our pre-tax value of the plan assets plus the life insurance right there. Here's that total from the other page minus the taxes net to heirs. So when we do a comparison of these two, which I did down here, let's look. I've got retirement plan taxation. We bite the bullet early here. Again, we're going to get it back. I can make the case that that's zero because they're paying for it, but they're getting it back. Here's the taxes that would be paid on an annual basis, an aggregate running total in order to try to generate the same 216 of income. Graphically, this is what we looked like in the beginning. So about $1.2 million of better off in terms of retirement plan taxes paid. And keep in mind, we don't run out of money here. Here we do run out of money. And eye on the prize also is what's the differential of the don't do it versus the do it in wealth transfer to heirs. That's represented by this graphic here. And you've got about $3 million more of projected income that they'll pocket over and above 7%. And we know they're not going to get 7% year in, year out in a qualified plan. And here's the taxes, don't do it versus do it. And once again, the income differential. And I also put in some charts, bar graphs at various ages. Here it is at age 60, net worth, transfer taxes, wealth to heirs. We got the big delta because of the insurance, of course. Scoot out 10 years. We no longer have any transfer taxes here. We're still winning on wealth transfer to heirs. And family net worth is about the same. Family net worth being, hey, you know, that's how much they have access to within cash value instead of the life insurance. So there's the comparison at life expectancy at 84. All right. So if I wanted to make this into a client presentation, what I would do is this. I'd go to the cover page, create that, or I did here. So we got analysis of status quo versus qualified wealth transfer. And I just differentiate, as you're going to see, between this and the death benefit play. 216 of income. All right. And let's hit and preview that thing. And it's going to come up and tell me that I got my cover page lined up right, table of contents. I always like to show graphs, do it versus don't do it as my lead off. And then, you know, I can back up all this with the upcoming status quo that we ran through. Okay. And then here's the qualified wealth transfer and how we arrived at those numbers and why it's superior. It's just the numbers that make it so. Okay. So we proved to them that by doing this from an income perspective and from a wealth transfer perspective, they're actually better off. Okay. Now, a couple things I forgot to do on here. One, I forgot to name it. So let's just name this QWT male 62 million IRA income 216. Hit the checkbox. We got that thing named. It's in there. Okay. We can make a host of different changes here to say, what if, we wanted a different income coming out? What if we wanted a different premium? But in addition to RePredict being able to do that on just a life insurance illustration, it can do that on customized spreadsheets. So the spreadsheet that I showed you before right here, and to save time, I have already imported this, but let's look at how, if you were sitting in front of the client, you could make some changes rather quickly without having to go back through and rerun all of this, okay? So let's just say that the client says, and here's our income one, and that's the death benefit one. Here we go. Here's the IRR one. Okay. No, I want to save it. I definitely want to save this. Save. Okay. And here's that spreadsheet. Now, remember, on the edit page, I can insert a column before or after. What I did here is I just hit this on edit page, and I right-clicked and said, insert a new column after. And I actually made a new column for plan assets because we started with 2 million. Here's the premiums at 40%. Here's the tax. Here's our loans coming out of the policy, that to pay them back the tax, that to generate the income. And then I named this accumulated value, current surrender value, death benefit. So you're sitting in front of the person and they say, you know what, this looks good, but I don't want to allocate all of my 2 million to this. What would it look like if I did this for $1,250,000? We drag across to the right, we right click, and, well, first of all, we do this. We hit start a prediction up here, okay? When you're in the edit, you can change all this. When we hit start a prediction, you can't change the names of things. You can't move the columns around. So I want to do this. I'm going to right click, and really, I'm going to hit mark as dependent, which changes everything to blue, which just means if I change one thing, it's going to change everything. So I want this to be $1,250,000 of plan assets. He likes it, but he doesn't want to allocate all of his plan money to it. Now I'm just going to hit this button that says predict all, and presto changeo, this says, look, for $1,250,000 of assets, utilizing the same strategy, this is what I would allocate as premium. This would be the tax on those distributions, and that would be the refund of the tax, and that would be the income. So question, if we go back into the company software and put in 210,625 as premium for 7 years, when we take a loan out of 589,750 and we solve for income, how close are we going to be to the values that were predicted here? Well, I've already done that for you. And let's see, there's the 210,625, take out the loan. It says that income actually will be 135,486. What did we get here? 135,578. Let's check for accuracy on death benefit. Let's say life expectancy down the road, 85. 1,111,248. What was on the illustration in year 25 is 1,110,753. How about cash value? 866,710 actual of predicted 867,090. It's 99% accurate. Okay. Now I can export these values. First of all, I want to rename this down here and say rename, and I'm just going to say plan assets 1.25 million. Boom. Okay. All right. Another prediction. Now I can start another prediction by clicking this button, or I can hit create a prediction by clicking this. You're best to hit start prediction here because it'll clear everything so that it brings everything back to the original setting. Let's say the person says, you know what, I actually have more money than that, and I want to solve for how much would I have to devote to this in order for my income to be 300,000. Once again, click and drag, right click, mark as dependent, and we just changed this because we want the income to be 300,000 to 300. Click predict all, and this says if we allocate of, turns out the guy's got $4 million, he ultimately tells us. So, hey, Bob, if you use 2,765,000 of plan assets, we distribute 466,000 of distributions, allocate that to a life insurance policy. You pay this tax each and every year for 7 years and get it all back here. That should generate 300,000 of income. Once again, if we go into company software and input those predicted numbers, which is the 466,062, what do we get? So here's 466,062, taking the loan that it projected to do of $1,304,000. Okay, we don't get 300,000. We get $300,094. What's our death benefit? Well, if we put those numbers in on the illustration, we're going to get $2,459,000. And what did we get from the predicted values? We get $2,458,920. 99.9% accurate. Let's see. Cash value, $1,918,000. And over here, actual, it is $1,919,000. Shockingly accurate. Okay. So now we want to show him the difference between these three plans, and we want to line them up side by side by side. Okay. So how would we do that? Well, we've already got the first data set in there, if you will, but we want to get these two in here. And prediction 7, I'm just going to rename this and call it 300K income. Boom. So I want to get this over to InsMark, and I want to use the compare module within the InsMark illustration system. So what I'm going to do here is hit plan with InsMark. I'm going to hit load save data for a minute and bring up this one. And this one's going to be 300K income, right? Make sure. Yep. Okay. Basically, everything else is the same. I still want to change this to a male 60. And notice, because the columns had the right words in them up here, I really don't have to use the drop down boxes. It automatically corrected to the right fields to bring everything in that we need. Okay, so I'm going to hit save and submit. But this time, I know I've already got Wealthy and Wise open, but the module I want to use to do the comparison for them is the InsMark illustration system. So let's open that. Okay. And since I'm opening it and it wasn't open, it's going to ask me, do I want to create a new case file? And I'm going to say yes. I'm going to get the option to at least create new client workbook, and it's going to bring in his name, senior, and I'm just going to put -2. Okay. So I want to use this InsMark compare, and I'm just going to put up here 1.0 compare. All right. Okay. So I want to compare the 216 one that was brought in there before. I want to compare it to the 300. All right. And I can also compare it to the one where we're using 1,250,000. So one, just for starters, let's just look at these two side by side. And there they are. Okay. You'll see this goes out to, we'll we have it going out for 40 years, and this does a nice job of showing, hey, here's the differential in total income derived between those two from loan proceeds. I always like the circle summary that says, okay, for about a $900,000 difference, you're going to get $2.8 million more in cash flow, and we're still going to have a significant differential net of the loan for cash value and death benefit. If I now want to go back and show this other one, the plan assets where we're using 1.25 million, I am now going to hit the button that says plan with InsMark. I'm going to load save data. I'll take this and I'm just going to put, for my own abbreviations, plan assets 1.25 million. Everything looks the same here. I still do want to change this to 60. Otherwise, it won't let me do the comparison. It's got to be the right age. All this stuff is good to go here. And I want that to be 60. And that's male 60. Plan assets, PA 1.25 million. Okay. By the way, you can grab this up here like I showed before, move it around, make sure, it is drinking in the right death benefit. All these things are matching up. So now I want to hit save and submit. And directing it into either the web-based version of the data storage or directing it into the local. I want it to go to the local. So InsMark illustration system, it is already open. And I'll hit load the new data source. We'll hit edit here. There it is, right there. Add that. Okay. Now I want to preview it. Okay. Each one of these is a little something different. If I really wanted to name this, and rather than just Life Pro Plus, I could go back in and say Life Pro Plus plan assets 1.25 million. Just show you how to do that real quick. In here, I want to go to this and let's look at it. So I want the policy to say Life Pro Plus plan assets 1.25 million. Okay. Just to distinguish that on the comparison, the one that's showing $300,000 of income, I could do that for too, but that's pretty easy because it shows it. All right. Remove that guy. Now preview. There you go. All right. And you could do just what I did there and have this say Life Pro Plus 300K income. So when you look, there's 3 to a page. I know we can do 4, but I'm not going to do that to you. And there's the differential in income generated if they use 1.25 million of plan assets. Here, here was the original one that used 2 million of plan assets. And here's the one where he wanted to solve for how much in the way of plan assets would he have to use in order to generate 300K of income. And there's your beautiful circle summaries depicting colors and values for cumulative payments, after-tax cash flow, and cash value and death benefit. Okay, so of course you can print all that out. We're done with that. Now let's just say that he decided that he really wants to do the one for the 300,000 of income. Now this, as close as it is, this isn't anything you're going to print out and send in with the application. So see up here where it says make compliant. What we want to do is send this off to our illustration desk or to us so we can, make it a compliant illustration. But typically, most of you are working with an illustration desk. You're working with somebody at your insurance marketing organization. So we're going to hit make compliant. Because as good as this is, it's still not a compliant illustration. So I want to hit the load save data, and I'll do L60. Oops. Oh, hang on. I haven't saved it yet. Sorry about that. Let's go back and do that again. Okay. So it's automatic. If I go into this, I'm in this tab. I hit make compliant, right? But the one other thing I want to do in order to give them the template upon which the original illustration was created, I want to add that original illustration, okay, which was this one right here. And I'm going to send it, I'll send it to me, okay, at my email address. If you're sending it to somebody else too, you can hit the BCC me, and I'll hit, by the way, this autofills this in here. It defaults to this verbiage. You can put in anything you want. I'll just leave the default in there. Save and submit, and I'll put save as mail 60 QWT INC 216. Confirm. All right. Form data is saved. Email sent successfully. We'll go check that out in a second to make sure that it was sent successfully. I want to save this, okay? And to the extent I've got a notebook set up for this person, because I may want to run a number of different ones here, I'm going to put this in that notebook. So I can put it in the InsMark notebook. I'll put it in the, I can put it into more than one, but I'll put it into this Bill Stinson notebook and just hit add. And it's now in the Bill Stinson notebook that I can go to at any time. Let's check the email to make sure that it did send it to me for making the compliant illustration. And survey says, let's see, all mail. There it is. Please find a prediction I recently created in RePredict AI. Use this information to create a compliant illustration that matches closely. And now I actually sent in the InsMark comparison one. I clicked the wrong button. But typically this is going to be the actual illustration. And then this is a CSV of the prediction that they can use to create the illustration from. Okay. So with RePredict, you can do a variety of things that will cut down the time in which it takes you to jump back and forth to company software, for instance. And you can do it really quickly. Again, we as producers, entrepreneurs, we love beginnings, we love endings, we hate the middle. This just shortens the middle. If you don't already have RePredict, what you can do is you can go into the InsMark website and hit strategic partnerships and click RePredict right here, and it'll take you to it. If you've already got RePredict and you are in the data session, okay, and a real quick way to run another illustration. So let's go into data here. See RePredict right over here? If you click that and you've already got a license, it should take you, boom, right to your ledgers page. Okay, you don't have to go into the web page portal to start with. But from the web page portal, to the extent you do want to learn more about this, I would highly encourage you to hit the help section here read these various articles, and also to look at the videos that we have here. Next in the line will be the following. We just looked at this for income. What if we're looking at this as a death benefit play? All right, stay tuned for a max inheritance play. Thanks for your attention. I hope this was helpful.